Welcome, ladies and gentlemen, Commodity TV here out of our studios in Munich, and with me here is now a guest, first Cobalt, and Trent Mell, the CEO, wants to give us an update on his terrific company. Trent, good morning.
Good morning, Jochen.
Great to have you here in Munich, and I think we spoke the last time like 8 months ago, even at PDAC. Different time, different market, I would say. Maybe a short comment on the market, because as everybody, you were also hit hard, right, in the stock price.
Yeah, base metals are all down, and lithium and cobalt names started earlier. U.S. trade war, China, fears of a China slowdown, I think overcorrection, frankly, in the space. So me and my peers, I track to the larger cobalt peers, we're all at 52-week lows. Great entry point, but we got money, we got a project, we just got to work our way through it. And as we enter the new year, I think we'll be okay.
Exactly. No, I think also as the fundamentals are changing dramatically on the positive side, we see more and more e-vehicles, e-car, plug-ins, hybrids coming onto the roads. And that is what I would call your bread and butter business for the future, because you will be one of the suppliers of the cobalt in the future to that. So maybe we can start, before we come to your flagship project, Iron Creek, maybe some words on the Canadian Cobalt Camp and your refinery, because that might be something like a cash flow scenario.
Yeah. So the Cobalt Camp is how we started. Right? We was a three-way merger back in 2017 that really got us on the map before we went and acquired our flagship a few months ago. So with the Cobalt Camp, we've got 50 past-producing mines. Very interesting, very prospective. But I think having acquired something that's more advanced in the U.S. from an exploration company building perspective, America is really where our future is. But yeah, the refinery is probably the nearest catalyst we've got, because it's
I think you have two scenarios evaluated, right?
Yeah, we do. We're looking at restarting it. It hasn't operated in 3 years, but there is no permitted cobalt refinery in America.
But we have one.
And we've got one. and if we can get that started in 18 months, we're now looking at third-party feed sources, hydroxides from Africa, feedstock from North America. We're talking to offtake parties. We're talking how to finance it. So we've got a number of things. We'll probably see that come together early in 2019. But very excited with the idea of being able to restart and become a cash-flowing entity in under 2 years.
That would be great. Yeah, I think you want to finance that, almost with no dilution for the shareholders, right? Because you can do offtakes and deliveries and whatever, right?
Yes, and so my commitment to shareholders is to try to do zero equity. That if we do restart, that is a $25 million capex that we would partner. We would look at streams, we would look at debt, we would look at joint ventures. I think there's a lot of interest in this refinery, in the asset, in the cobalt metal, of course, but also in the cash flow. So if we can, no debt and bring cash flow in, which will then fund Iron Creek.
Of course, fantastic. Then let's move to Iron Creek, because the drills were turning a lot since we spoke last time. Maybe you can elaborate a bit what you have found, and because I think you have tremendous widths there, right?
We do, and as we've looked at cobalt assets, we started in the Congo and decided it wasn't for us. Looked around the world, Ontario, we've got a lot of high grades. The hard thing to do in the cobalt world is to get the broad widths. And so we're getting 10, 20, 30 meters of mineralization. We now have 3 drill rigs. We're trying to accelerate things. We have a maiden resource that's only a month old, 45 million pounds in situ at an inferred level. And I think we can double that as we double the drilling.
That's copper, of course, right?
And the copper is 175 million pounds in situ in the inferred resource. It's a good bump. It's a 30% credit to the resource.
Super. And now, I mean, as you said, drills are turning. I think you did, what, 29,000 meters, and you want to top that up probably to 40,000, if I recall that correctly.
That is correct, yeah.
And so with that, you can do another resource estimate next year. What are the plans for that?
Yeah, and so we got a special asset, and I feel lucky. Every drill hole we put in is hitting mineralization. And so this is a massive sulfide, semi-massive sulfide system. Easy to spot the mineralization. So now our job is pretty simple. It's keep drilling. Let's see how big this can get. We got to infill, but let's step out and see how big this could be. And let's start de-risking it, permitting and doing all the engineering studies. So with 3 rigs, I want to finish a second drill campaign by the end of this year, by before Christmas, and then look to the end of March to put a new resource out, targeting a 50% bump in tonnage if all goes well, targeting a double in a year from now. But after we get this next resource out in March, then we can start the PEA and we can start to show the world what this looks like from an economic perspective.
Fantastic. I saw in your presentation also that you can evaluate like an underground scenario and an open pit scenario. Can you give our viewers maybe an idea why you have those two possibilities? Because I think it's quite unique.
It is, it is unique. I mean, you look at the Idaho Cobalt belt, in my opinion, is probably one of the best jurisdictions in the world. for cobalt exploration because it's primary cobalt, which you don't see in Africa, Australia, anywhere. And then over and above that, everything we've seen historically in the camp has been underground. The Blackbird mine, our neighbors, Cobalt and others, and it's high arsenic. And so all of a sudden where we go, we've got no arsenic issues. It's sitting in a pyrite, which is wonderful from a processing perspective. And then we've got, in addition to these two higher grade zones that can be mined as an underground, we've got disseminated mineralization that would also allow us to look at this as an open pit. Now, my view as a junior, early cash flow, we've got 3 adits. We're already into the mineralization. You would probably look at this.
So you have already underground development,
we
right?
got 600 meters underground, 3 access points into a couple of high-grade areas. You could envision an early scenario where you're mining underground, working your way to a pit, and we've got the added advantage that this property was explored historically by Noranda in the 70s and 80s. They've got mining patents, which means they've got the surface rights. So from an underground perspective, the permitting timeline here is quite favorable because you're only doing state-level permitting, which could be done as quickly as a year.
Yeah, and I think Idaho is a mining state.
It's a great state. Yeah, phosphate, silver is what they're known for today. Historically, there was some cobalt mining, and I think between us and Cobalt, we're going to bring that back.
How is the support, let's say, from a political standpoint? Because as I could imagine, as I watch Mr. Trump as a president, America first, he wants to get production back, mining back into the US. He must love you.
Yeah. It's been it's been wonderful. The timing is great with the U.S. having put cobalt on the list of critical minerals. We now have federal support, which is always, as an investor, when you look at a U.S. project, state level permitting at a place like Idaho, you don't worry about it. It's a mining state. They're friendly. The concern goes to, okay, do you need federal review for our open pit? Likely would need some federal oversight. Now, I had the benefit of some very high level meetings in Washington, seeking our advice in terms of how do we, as America, bring cobalt production onto our shores. This right now, it's a DRC story, and most of that gets refined in China. So America is looking at how do we get away from
more
DRC China.
Right?
Exactly. And we've got a key solution, and as basically an advisor, if you will, on some of the consultations, our advice was simple. It's all help us with permitting. Let's get rid of the barriers.
Okay, and that's when I see the size of the possible size of the deposit, and I think we will have a very clear understanding next year on when you do the second resource estimate for sure, like as a first large estimate then, I could imagine that you are already on the radar of several companies. They want to partner with you maybe?
Yeah, I think
I know you
that's
cannot comment directly, but let's say, you talk to people already?
Yeah, I think what we've seen with our deposit, it was a surprise to us. I mean, we were on site, we did our diligence, we looked at core, and we expected a certain outcome. We didn't expect the open pit scenario. And our view is that we've got a lot of room to grow this. And I think smart money has already noticed that as well. Look, the auto supply chain, we've seen them do deals on the lithium side. We saw Volkswagen and Glencore do a deal. So cobalt, it's starting to happen. Over and above that, some of the mining companies, base metal companies and others would look to cobalt as an attractive maybe add-on to their business. So, my plan to, in addition to financing the refinery without any equity, when I look at how we fund Iron Creek going forward, to bring in a strategic investor at the right time is a great way to backstop the company. It brings credibility. It's sticky money, technical support, and it's not capital that's going to find its way back, or shares that'll find their way back in the market. So priority next year for sure.
Super, and it would de-risk the whole project, of course.
Absolutely.
Yeah, fantastic. Maybe one word on the financial side, and maybe also on your shareholder side?
Sure, yeah. We've had great shareholder support historically out of Australia, and some funds in Hong Kong as well. But now that we have closed on Iron Creek, the interest in America is picking up, and in Europe as well. So I'd like to try to migrate or grow that shareholder base in North America in particular. We've got great retail liquidity. Our balance sheet's fine. We raised a lot of money last year. We've invested a lot this year. We will need to go to the market at some point, as juniors do.
For sure.
But that doesn't stress me. No. Look, the markets are in tough shape. The more we can de-risk our asset in tandem with a more favorable investment climate, that'll bode well for minimizing dilution going forward.
That's right. Fantastic. Great. Well, then, Trent, thank you very much. It was a good update, and all the best. We look forward to your drill results, and they will come out, the next week so far? And then for sure in Q1, right?
Yeah, there'll be a steady stream of drilling every 3 weeks or so,
Okay, and we want to see those large widths.
You got it.
And nice grades in addition.
Absolutely.
Great. Thank you very much. All the best, and Merry Christmas, of course.
Thank you very much. I appreciate it.
Yeah, ladies and gentlemen, it was Trent Mell with an update on First Cobalt. He's the CEO of First Cobalt, and you heard it. The drills are turning, and so we are waiting news here. And so far they showed very good widths already, but I could imagine that there are coming some more drill results with even more good widths and good great results. The company is in good shape so far financially. Somehow, of course, as juniors have to do, they need to raise maybe next year, end of next year, some money. We don't know. But the point is they are doing a great job. They have a sensational asset with Iron Creek. They have a refinery with a possible cash flow scenario. And I have a good feeling that this company is already on the radar. So check it out. Stock is cheap. Thanks for watching us. Bye-bye from Munich.